Hey everyone, Coach Investor here back on our earnings video for today. So we're starting the evening off with Block earnings report. Then we're going to jump into the PayPal one. Two different companies, two different stories as well, two different market reactions. Block Square, that I'm making this video, is up around 10-11%, while PayPal is down 10 to 11%. Now, it's not to say that it wasn't a good quarter or that Square had an amazing quarter. No. Square, Block did beat on earnings per share and revenue as well, and I believe PayPal did the same thing, but there's more to that story later in another video. Now, for Block, they do show us that regardless of the current macroeconomic situation, the business is performing quite strongly. Now, remember we talked about the scenario during the pandemic. The cash ad side of the business was extremely strong. Square Seller, not so much. That's normal. And then coming out of the pandemic, we knew that Cash App was going to be a bit weaker, but that weakness would be picked up by Square Seller since everything was reopening. So we have this nice little balance there on both sides, and now with Afterpay as well, all three sides are working quite well together. So let's go and have a look at the earnings report. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So as always, we'll first go over the main highlights. So gross profit continues to grow quite nicely, over 38% year over year to $1.57 billion. On 3-year CAGR, growing 46%. So quite nice. It's also growing quarter over quarter. As for Cash App gross profit, that grew 51% year over year, also grew quarter over quarter. 3-year CAGR, 84%. Why are they showing us 3-year CAGR? So you get the pandemic and post-pandemic effect as well. Then for Square gross profit, that grew 29% year over year, also grew a little bit quarter over quarter. And then for the net loss, obviously we can see here a huge improvement from Q1 and Q2. It's still a loss of $15 million, but we are getting there. There are still a lot of impairments and one-time charges here and there. We're going to go over that later in this video. Then as for adjusted EBITDA, nice growth year over year and quarter over quarter. That's positive $327 million. Now, first metric with regards to Cash App or Cash Card. So in September, Cash App Card had nearly 18 million monthly actives, or more than 35% of monthly actives. They also say here that they meaningfully grew their network to more than 49 million transactive actives in September. That's up approximately 20% year over year. And now my favorite part of the business is Square ecosystem. So they do say here that gross profit for their vertical point of sale solution grew more than 45% year over year in this quarter. And of course, when it comes to growth, we'd like to see this continuing right here. So Square GPV mix by seller size, they continue to experience strong momentum up market with gross profit from mid-market sellers up 22% year over year and 39% on a 3-year CAGR basis. Now in this right here, the $50 billion is also an increase quarter over quarter, and each segment underneath it has also grown as well. And one last thing with regards to this, if we go back to Q3 2020, we can see that the mid-market sellers is the one that generates more than $500,000 annualized GPV, was $8.8 billion, which was just above the 8.7 of the category below. And the lowest one was actually dominating there, the ones that generate under 125,000 annualized GPV. Since then, well, the big segment has outgrown all the other ones, which is great, which is exactly what you wanted to see. Continuing on a positive note is the gross profit in markets outside of the United States. If you've been following the channel for a while, you know that I've been extremely critical of Square, Cash App when it comes to the international expansion, and rightfully so, to be honest, because I do still think that they're late to the party. But these numbers right here are promising. Still extremely small, but promising. The gross profit in markets outside of the United States reached $121 million, or 15% of Square gross profit. I believe last quarter was around $98 million, so nice growth here quarter over quarter as well. And obviously the usual total net revenue, including and excluding Bitcoin. So the total net revenue was $4.52 billion. That's up 17% year over year. Now, excluding Bitcoin revenue, total net revenue in the third quarter was $2.75 billion, up 36% year over year. And that number to me is much more important. Now, gross profit was $1.57 billion, as we've seen before. And Bitcoin gross profit was, as usual, the 2% of Bitcoin revenue. Now, the company processed $54.4 billion in GPV in the third quarter. That's up 20% year over year, and a small increase quarter over quarter as well. Now, of course, when you're looking at those numbers, they will always have a small impact, a positive one, from the Buy Now Pay Later platform. So as you can see here in the third quarter of 2022, the Buy Now Pay Later platform, so Afterpay, contributed $210 million of revenue and $150 million in gross profit. So yeah, not amazing numbers for a company that they acquired for over $30 billion or so. But then again, they acquired it using their own stock, which was also extremely high. So win-win or lose-lose, however you want to see this. Now, as for operating expenses, yes, you've guessed it, it increased quite a lot. So there were $1.62 billion in the third quarter. That's up 46% year over year. And this included $37 million of amortization of customer and other acquired intangible assets, primarily related to the acquisition of Afterpay. So product and development expenses were $548 million. That's up 52% year over year, primarily driven by headcount and personnel costs, of course, as always. Then sales and marketing, that was $486 million, up 19% year over year. And G&A was $395 million on a GAAP basis, that's up 48% year over year. Now, as we scroll down, we will get to the earnings. So here we get a bit more information to what has happened. How come we're jumping from the negative 208 million to now suddenly 15 million? So here's the explanation. In the third quarter of 2022, net loss attributable to common stockholder was $15 million, which was affected by $56 million of amortization of acquired intangible assets and a $2 million Bitcoin impairment loss, which were not part of our core operating performance. Excluding these items, net income was $43 million. Net loss per share attributable to common stockholder was 2 cents on a basic and diluted basis in the third quarter, based on $593 million diluted shares outstanding. Now, as for the adjusted net income per share, that was 42 cents, representing a 18 cents increase year over year. And if you're worried about, a recession, etc., don't be that worried for Block, because they have enough cash to survive. They've got $7.1 billion in available liquidity, with $6.5 billion in cash equivalents, restricted cash, and investment in marketable debt securities, as well as $600 million available to be withdrawn from their revolving credit facility. So they have enough money. Now, of course, when it comes to expenses, that will continue to increase. Share-based compensation has increased as well. It's usually what happens also when, two big companies merge together. So that's to be expected. Now, with regards to the forward-looking commentary, it looks a bit like this. So as for the non-GAAP operating expenses, including and excluding Buy Now Pay Later, you can see here a quarter-over-quarter increase of around, on average, let's say around $200 million. And then as for Block gross profit, for October, they're seeing here a 37% year-over-year increase, and excluding Buy Now Pay Later, a 24% year-over-year increase. So, okay, I'll take it, especially in the current market environment. I'll take that. So to conclude, let's be honest, it was a pretty good quarter from the company, especially if you take into consideration everything that's going on right now, high inflation, more uncertainties. I mean, it's a pretty good quarter, and it shows you that the company is fundamentally strong, which means when the overall market turns, it will be a huge positive for the company. Of course, you would like it to be profitable by now. I've discussed this with someone on Twitter. Of course, this is something I personally know already. I know that right now the fact that it's not profitable is something to think about. And then obviously with regards to the international expansion, especially with regards to Cash App, I know they're going first the Square way, and then maybe they'll adopt Cash App. But to me, they're still very, very late. And then the whole crypto thing, to me, they can just throw it out, put the CFO as CEO, and Jack can go do his things for free, not on us, the shareholders' expense. But coming back to the positive side, good quarter, still holding shares. I'll probably add it on the watch list to add because it's still my second largest holding. Obviously, do share your thoughts down in the comments below. What you think about this quarter? Are you buying? Are you holding? Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the PayPal video. Bye bye.